As we look to close out 2016, the ETF industry is on track for a record year. Fixed income ETPs, renewed appetite for broad emerging markets equity, and the second half turnaround for US equity, just all driving flows. Well, Ursula Marchioni from iShares, EMEA, BlackRock is with us. Thanks very much for coming in. I mentioned there are three of the big themes, and that's what's seen this record amount in ETFs, isn't it?
Absolutely. So we're on track for another record year, 360 billion inflows into the industry year to date, and it's not finished yet. So we're really excited. And yes, I think you touched upon the main elements of 2016, the fact that it was a tale of two halves, risk off, a lot of fixed income and commodities purchases in the first half, and then triggered by one of the black swans, a big risk on rally, which mostly benefited emerging market assets in general and US equities. I think some of these themes, by the way, will continue in 2017.
Yeah, we've seen that with so many things from the second half that we are going to see the ramifications and the implications of them really continue, especially into the first half, if not throughout the year.
Completely agreed. So if I had to summarize and think about the three big trends that I believe will define 2017, number one will certainly be reflation. So the reflationary trade is coming in. We see yields bottoming up from a 35 years, obviously, descending pattern. In the US specifically, yields are coming up and the curve is steepening, and then it's clearly signaled and coming through. In Europe as well, if you think about the recent changes to the asset purchase program, you can see that as well as some initial signs of the trend coming through. So it's certainly going to be one of the big backdrops that all investors will have to think about in 2017.
Let's look at some of those in more detail. Let's start with the reflation. How should investors then position themselves to take advantage of that?
So I think one of the elements that I would certainly consider is the US market. So to your point, US equities together with emerging market equities were the big risk on theme in the second half of this year. And the US economic situation is clearly improving. If I look at earning estimates, for example, they're clearly on the rise. The expansionary fiscal discussions that we see candidate and President Trump now continuing to push through will continue to amplify the trend that started even before the election result came out. So that is certainly an area that I would be very focused on. There are a couple of things that investors will need to take into account. Number one is the fact that valuations are high. We've been saying that for some time, but that remains true and even more so now. And number two, the fact that post the election, we've seen a spike in inflows. So those two elements can actually change the picture slightly. What I think that investors can look at with confidence is the fact that yields are coming up and that regulation would broadly be a bit looser. So that's going to be supportive of US financials and US value. So those two will be my ideas for capturing the reflationary opportunity.
You mentioned sort of low returns ahead, poor 5-year government bond returns. So are they completely out of the picture then for a while, do you feel? Is there a way to play that?
No, there's absolutely a way to play that. So the lower for longer environment is something that I think we'll have to continue to face for some time. If I look at the BlackRock 5 years forward-looking estimates for various asset classes, again, they continue to point towards lower economic growth across the range. So what that means from my perspective is that investors will continue to be pushed towards a higher risk spectrum assets. So think about emerging markets, think about investment grade and high yield and so on. So that search for yield will continue, and in that sense I think emerging market assets will continue to be interesting. Here again we've seen some short-term headwinds, strength in the US dollar and obviously anti-trade rhetoric that is obviously negative for emerging market assets. But yet again the search for yield will offer structural support. And I would also point towards the fact that earnings, fundamentals, structural reforms are really coming through, and they have nothing to do with the outcome of the US election. So while I think we should all remain vigilant, I would continue to have them in mind to address the lower for longer.
We always talk about the need for diversification here, but as you said, you alluded to at the beginning, that is getting more difficult, and so the rules that used to exist, even at the beginning of this half of this year, may no longer exist next year.
Yes, I think that's certainly the third big a tension point or question mark that investors will face in 2017 and beyond. So the fact that, for example, bond prices and equity prices used to move in opposite directions, that's not true. US equities and oil, high correlation there, which is not evident anymore. So the whole system is distorted to a certain extent by central banks and big black swan political events. So in my view, the way to address the situation is certainly look opportunistically to for diversification opportunities. Gold remains one of those opportunities, but more broadly, what we'll see the market doing is to focus more on portfolio construction, on analytics that allow us to understand how these asset classes interact with each other, both at macro risk factor and at style risk factor. So all the discussions about factor investing, they will only accelerate in 2017, so stay tuned.
So those are the three main themes. Before we leave, for you, what will be the big, not theme, but the big winner when it comes to sort of ETPs over the next year, or ET flows?
ETP flows over the next years, I think certainly fixed income ETFs and factor or smart beta will continue to gain momentum, because again they play into the adoption. There are new tools to do things that historically were the remit of active managers or other parts of the industry. So again, democratizing access to those exposures, those things for me will continue.
Okay, on that note, we do have to leave, but thank you very much, Ursula Marchioni there from iShares EMEA, BlackRock, on the outlook for ETPs over 2017, highlighting reflation, diversification, or rather a lack of diversification, and indeed low returns are the three main themes to watch out for.